Thanks for joining us at the Business Growth Cafe, where each week we select from a menu of topics for a focused discussion with an industry expert to provide insights that can impact your business's growth. With your host, Angelo Ponzi.
Good afternoon. I am Angelo Ponzi, your host here at the Business Growth Cafe, and thank you for joining us. Each week, as we said, we select from a menu of topics that can impact your business growth to discuss with experts from a wide variety of disciplines. And today in the cafe, I'm excited to have Jean Latu of Ingenio Solutions on our show to discuss the impact of not intimately knowing your financials and how that can have an impact on your business. Jean, welcome.
Thanks, Angelo. I'm very happy to be here.
Yeah, I'm excited to have you on here. This is always a kind of elusive thing that I have found over the years and as a consultant working with a lot of different businesses. And oftentimes, maybe more often than not, they just truly don't understand their financials and how to read them and that impact. But before we get started into this great discussion, why don't you talk a few minutes about your company and what you do to provide services and products and things like that to help companies continue to grow?
Sure, I'd be glad to. So I founded Ingenio Solutions about 4.5 years ago. We're a consulting firm, but we strictly focus in finance and accounting. So I have a team of CFOs, chief financial officers, and controllers who work with our clients either on a project basis, they may be a software implementation, they may fill in or work as an interim resource for an organization, usually somebody that's responsible for supervising people, closing the books, doing monthly financial reporting, or even at the interim controller or CFO level. And lastly, what your listeners might be most interested in is we do fractional CFO work, which is part-time CFO, which is much more affordable for small businesses. Generally, they're constrained by their budget, and we appreciate that more than anybody else.
Really?
And we will help them, whether a couple days a month, a day a week, 2 days a week. It depends on their needs and what they have going on, and where they might need some financial expertise to get to the next place.
Okay. Well, obviously you used a word that's near and dear to my heart, which is fractional, as I am a fractional chief marketing officer. Do you find that there's a point in time in a business stage where they come to the conclusion that they need that senior level help from a finance standpoint and that drives the trigger? Or do they typically come and say, well, I really need that chief financial officer, but my budget can afford an accountant or a bookkeeper or a controller? Mm-hmm. You know, how do they make that decision in what type of person to, either outsource through you or just even to bring inside?
Right. There are several things that can trigger it. One is they may be looking for outside financing.
Okay.
Their bank might be asking for their financials. And usually what's occurred over time is that small businesses start with a bookkeeper, somebody who is good at organizing and gets the data into an accounting system like QuickBooks. They start with that and they don't realize they need more until the bank wants some evidence of where they're going. And the financials tell a story. So then the first thing that they would need to do is bring in somebody, a controller, CFO level person, who can change their books from cash basis to accrual basis. And why is that important? Well, accrual matches your revenue with your expense. Without it, you could have spikes. You could be up and down in your cash flow and not understand that you have hidden liabilities that you're not aware of. You're thinking that you might have lots of cash in the bank, but you don't realize what you owe to other people.
Right.
It's not showing on your financials. So that'd be the first step, getting those books on an accrual basis. And from there, the 3 key financials that you want to look at every month, I recommend at least, is your P&L, which is known as your income statement or your profit and loss statement, your balance sheet, and your cash flow statement.
Okay. Now let's take a few of those and let's break those down, because I think that, what are some of the key lines, if you will, or topics within those financials? So you use the word storytelling. And of course, I'm a brand guy, so storytelling is great. And those financials do tell a story. But what should they look for within, let's say, the profit and loss? Let's just go through a few of these to kind of give some insights, if you will, to the audience that are listening on what they should be looking for in the story that the document should be telling, and what specifics within those should they be looking at.
Sure. So I start with revenue. It's important to know what your revenue is on a monthly basis, on an annual basis. And it's important to know revenue this year compared to last year. The next item generally is your direct expenses, direct operating expenses, or direct cost, because if you subtract that from your revenue, you get your margin, your gross margin, and that's one of the most important items that tells you about your profitability. What is your margin compared to your revenue? It depends on your industry.
Right.
Is it 40%? Is it 60%? Some businesses, it's 75%.
And those do vary, kind of standards within various industries that they can kind of Google, if you will, and find out some of that information if they don't know.
Yes, absolutely. That's one way to do it, definitely. Okay. The other is to look at publicly held companies that are in the same industry, because you can get their annual report, which is all their financial statements online, and that's another good way to pull it down.
Okay. Do you, if someone were to do that and look at, the various annual reports, is there like look at one company or two companies or three companies at varying sizes within their category to kind of get a framework as opposed to just looking at one?
Yeah, you might want to look at the industry leader. That might be what you want to strive for.
Okay.
But you might want to look at smaller size, depending on the size of your company. You want it more comparable to your company. Usually, the larger the company, the more volume, the scale is different. And so the greater the volume, the lower the cost. They can drive their costs pretty low. Okay. The next item on the P&L, I would look at, once you determine your gross margin and you calculate that as a percentage of revenue, good numbers to know every month and every year, is sales, SG&A, so selling and general administrative expenses. So sales would have sales and marketing costs included in that are not a direct cost of producing the revenue.
Correct.
They're important, of course, in getting
Yes.
to the revenue, but they should not be included in your calculation of margin. And those selling and marketing should be calculated as a percentage of revenue and compared month to month, as well as the general administrative. You could calculate that as a percentage of revenue.
Right. And while that's necessarily on the balance sheets or profit and losses, for me as a marketer, I'm always challenged with, what's my return on investment? If we're investing in certain marketing channels and things like that, we have to look at it. Is it generating revenue or is it just building brand? Mm-hmm. And we look to set those criteria before we launch programs. But in this case, obviously, we have to look at what's the contribution to the bottom line and hence the return on investment.
Yeah, that's a great example of why that financial information is important.
Okay. And what about cash flow?
Okay,
Cash is king. Cash is king.
Cash flow it's very important to know your cash flow, but it is different from your accrual-based financial statement. So it's really all about cash, right? It's how much cash came in. That means how much was collected from your customers and how much cash went out or was paid to your vendors. And so that's why it's important to know your inflow or your sources of cash and your outflow of cash, because the net of that tells you if you have a net positive cash or a decrease in cash. And if you have month after month a decrease in cash, then you're spending more than you're making.
Right. Business is in trouble at that point in time.
Generally, and you need to look deeper.
When you think about cash, I mean, I always look at accounts receivable and what is the net? I've seen some companies it's due upon receipt, net 15, net 30, net 60, net 45, and that obviously has a huge factor on cash flow. Mm-hmm. And is there some kind of guidelines, or does this really go back to industry specifics as far as what the standards are and kind of the terms that you offer your clients?
It's very industry specific, and it may depend on the type of clients that you have or customers. And if you're a government contractor, you work with a lot of government agencies, they may have 60 or 90-day payment terms. Or you may work for big government contractors like Boeing, and you may have 60 to 90-day terms, which may not be comfortable or convenient for you. You'll need to probably get some financing to get you over the hump until you get paid, and then keep that cash growing.
Okay, that's a great segue. It's almost like we practiced this. Let's talk about loans for a minute and really what the banks look for and whether it's to finance growth or to actually to finance operations. I mean, I think there's a lot of different aspects and the types of loans that a business can get. So why don't we explore some of those and maybe offer some insights to the listeners on what they may consider?
Yeah, so I'll say that typically businesses will need a working capital line of credit, and that's for their operations. If typically a working line of credit, every year you must pay down the whole line of credit to prove that you don't need that financing consistently. Because if you do, if you struggle to repay that every year, you should probably turn that into permanent financing. And banks will do that depending on your financial statements. But they will turn that into permanent financing with a fixed interest rate payable over 5 or 7 years. And so then you can move on to other permanent debt, debentures, equity. You can think about equity financing. So if you want to bring in investors. So there's a lot of different ways to finance things. Accounts receivable financing is another one. When you can't get a typical bank loan or you just can't get a typical working capital line of credit, you may look to a particular type of financier, a finance lender who lends based on accounts receivable.
That's what you were talking about earlier with government. If you're out 60, 90 days, right, and you need the cash flow. I think, is that term called factoring?
Yes.
Yes, okay.
Mm-hmm.
Yeah, so I guess really it kind of depends, and that gets back to the whole conversation that we're having today, is understanding your finances, your number, and more importantly, understanding your business and what you need to help drive that growth. You know, if we look at trends and analyzing your financials, you know, is it a mark in time? Is it the prior 3 months? Is it a prior year-to-year comparisons? Let's go back to storytelling. What is telling the best story? And then more importantly, not only the look back, if you will, but how often? How often should people pay attention to these? Because if every month, if you close every month, you actually don't get your numbers until maybe the following 2 weeks later, and now you're into the next month, and just, I'll look at that later. It's not that important right now. So what's some advice that we could give the audience?
A good discipline is to schedule a regular meeting, same time every month, to review your financials with your top financial person, whether that's a CFO or controller. That just builds in good discipline. I recommend reviewing that with your senior management team so that you all are aware of changes in the P&L, changes in the balance sheet. From a trend perspective, I think it's important to look at year over year. Sometimes your business may be seasonal, and looking at it, not only having monthly figures, but looking at the quarterly and looking at the annual are all important. Whenever I produce financial statements for a company, not only do I want to look at actuals versus budget, so budget is very important to have an annual budget in your system. I also want to see what was the expense or the revenue the same time last year for this month, and what was it year to date this year, and what was it year to date last year. All of those are numbers that can give you an indication of trends. Are you growing? Are you increasing? Or are you declining? And is it seasonal? Do you expect the decline and you know it's going to turn around by the end of the year? Then comparing it to prior year and even the year before, 3 years of data is very valuable.
You know, you mentioned about, budgeting. I heard the word budget in there. So we're going to talk about sales forecast, if you will, budgeting for sales and operating cost. And what are some guidelines on that? Because it really, forecasting is always interesting, especially depending on your client base. I tend to look at this idea of renew, like looking at customers I have, and then recapturing customers that I might not have had for a couple of years, and then acquire. Now, you can pretty much forecast the renew if you're watching your numbers, and maybe even some of the recapture. But the acquisition part of it, forecasting what you're going to do in a new category or new with a new product, becomes pretty elusive. And then obviously putting together budgets to help support what it's going to take to do that. So any insights or guidelines on forecasting and budgeting that you can provide?
To the extent that you're not a new business and you have a track record, a couple, 2, 3 years, it's really important to be able to look back at what happened in the prior years. I always recommend zero-based budgeting, which is you start with zero and you build up from there. Don't just take last year's numbers or this year to date and annualize them and just add 10% for growth in revenue and add 5% for growth in expense. I recommend just zeroing it all out and starting from the basics. What do I need this year to drive this amount of revenue? And I think you'll end up and you'll have a happier result because it'll be explainable. So then in the coming year, when you're looking at actual to budget, you know what was in the budget, you know what you expected. You get to see how actual compared to what you expected.
Right.
And then you can adjust, perhaps then you adjust for a forecast because you're either going to exceed your budget or not. And so you can't change your budget. I never recommend changing the budget mid-year, but you then create a forecast to tell you where, I have better information now. I'm only 6 months till the end of the year. Let's create a forecast of where we think we're going to end up.
Right. It's really like keeping a pulse on what's going on. Same thing. I'll flip it over to marketing for a second. I mean, we're always keeping a pulse on how is the campaign doing? What, are we moving the needle in accordance and not waiting, if you will, to the annual plan, which I think is kind of obsolete these days because things move so quickly. If we wait an entire year to plan, then we're in trouble. And I would imagine the same kind of thing from a finance standpoint, and that's why you're recommending keeping an eye on things. But you made a comment, and that's not adjusting the operating budget, if you will, midstream. Mm-hmm. And so I know I've been in businesses and had clients that, we tend to look at it every quarter and make adjustments that are going on. It sounds like maybe we were making some mistakes there, and maybe we're moving the goalpost.
Well,
right?
If you do change your budget, it's really called a forecast. It's no longer called a budget.
Okay.
The budget should just always remain as this thing that doesn't change because, at one point in time you expected next year was going to look like this. But a forecast, you can update every quarter if you want, and it looks to the end of the year where are we going to end up. And ultimately, you're going to compare that to budget to see how good you are at estimating where you're going to be. But you're going to make buying decisions based on your forecast and your budget.
Right.
And you're going to, you're making revenue assumptions. And if those don't pan out, you better scale back on your spending because if you don't have the revenue, you're going to be upside down.
Right. In that case, not necessarily changing the budget, but maybe revising. It's okay to spend less. Yes. And you can see that you spent less.
Correct.
Now, the other thing, I was reading an article not too long ago, a blog, I guess, and they were talking about the annual plan, the annual strategic plan. And again, I think it's almost obsolete these days because I
disagree.
You do?
I disagree.
You'd agree? No, I don't say we shouldn't plan annually. I just say that to do a one and done, right?
It needs to be a living document.
Living document. I tell my clients that the day we sit down and we present the plan and you say yes on the plan, it changes. Something happened in the marketplace, your competitor, political, new technology that changed that plan. So it's really a living, breathing entity, if you will, and it always has to be fluid. Now, when I say the annual planning is dead, I don't believe that there shouldn't be an annual event, but I also believe that annual event is not the beat-all, and then you just move forward without keeping a constant pulse on things. And
agreed. Yeah, I do think it's important for the discipline of annual planning, and a budget comes out of that. So I'm a big proponent of making sure you have an annual plan, and the result is at least a budget. But I believe that at a minimum quarterly, if not monthly, you should be reviewing where you are compared to what you planned for.
And then real quickly, top-down budgeting or bottom-up?
Well, I'm a fan of bottom-up.
Okay.
But I can see the rationale for the reason for a top-down. It depends on your company culture. It depends on your industry. I would do top-down revenue, and I would do bottom-up expense budgeting.
Okay, that's great advice. So we're down to the last few minutes here, believe it or not. Time has flown once again. I have two more questions. First one, is there 2 or 3 tips that you would like to impart to the audience that as guidelines and things that they should go home tonight and break out their budget and their plan and start looking and evaluating and looking at their numbers? Any guidance there?
Yes. So my first tip is set a time to review your monthly financials with your top financial person in the company. Or if it's a fractional CFO, make a plan and have that meeting. Compare where you are this year to last year. Compare where you are this year to where you expected. So compared to your budget, and make adjustments in your forecast accordingly. Get your books onto an accrual basis. It'll make it much easier and friendlier when the bank comes calling and wants to see your financial statements because you want to increase your financing, perhaps. And make sure you're on top of your cash flow, your AR. So accounts receivable is the heart and soul of your cash flow. Don't let those accounts go out too far, whatever your industry norm is. But at 30 days, if an account hasn't been paid in 30 days, you should be doing some soft collection calls, calling your customer, whether it's you or the person in charge of AR, calling them to a friendly reminder that we haven't seen payment for your invoice. Just wanted to make sure that it was going to be paid this week.
Right. That's great advice. I have to go back. One little quick story before I ask my last question. My dad was a plumber growing up, and one of the jobs he gave me at a very young age was collections. So I learned very early about knocking on someone's door and asking them to pay the bill. So I'm glad he taught me that. I didn't like it at the time, but it really paid off in the end. So the last question before we sign off is, we're both business people. We have businesses, small businesses that we run. So what keeps you up at night as a small business owner?
Well, I thought about that, and my initial thought is cash flow. If you don't have enough cash in the bank to pay the bills, that's a problem. But ultimately, the root of that is pipeline, and then the further root of that is really your sales and marketing efforts. So it's for me, it's all about building enough pipeline to drive opportunities and making sure that my sales and marketing efforts are doing what's expected to fill up that pipeline. Okay,
great. So as we end here, how can someone contact you if they're interested in your fractional services?
Sure. We have a website, ingeniosolutions.com, Ingenio spelled INGENIO, and solutions has an S on the end.com.
LinkedIn and
oh yes, of course. LinkedIn. So my name is spelled Jean, Jean, Latu, Latu, and you can find us on LinkedIn or on YouTube, Twitter, all the best places to be on social media.
All right, great. Well, thank you so much. I really appreciated this. Again, as I say, time flies. It's really crazy. So again, to the audience, thank you again for joining us on the cafe today. You can find out more about me and read my blogs at the Ponzi Group. That's www.theponzigroup.com. Connect with me on LinkedIn, and you can subscribe at our show on businessgrowthcafe.com. And coming soon, I hope, to Stitcher and SoundCloud and iHeartRadio and iTunes, to name a few, as we start to grow this podcast. Join me next week for lunch at the Business Growth Cafe, and thank you.
Thank you for listening to today's discussion at the Business Growth Cafe with your host, Angelo Ponzi. Take a moment to subscribe to this podcast and visit our website at www.businessgrowthcafe.com. Read Angelo Ponzi's blogs at www.theponzigroup.com.